Here's a number that should make every freelancer stop scrolling. According to the IRS, self-employed workers who skip the self-employment tax deduction overpay by an average of over $1,000 a year. And most of them don't even know the deduction exists. I cover taxes and retirement for self-employed workers. And that one missed line on Schedule SE? It's just the beginning. By the end of this video, you'll know exactly which deductions are legally yours to take, and how to stop handing the IRS money that belongs in your pocket. The self-employment tax deduction. Most people skip. Let's start with the deduction that trips up nearly every new freelancer. When you work for yourself, you pay self-employment tax. Currently, 15.3% on the first $168,600 of net earnings, according to the IRS for 2024. That covers Social Security and Medicare. But here's what most people miss. The IRS lets you deduct half of that SE tax directly from your gross income. Not as a business expense, less as an adjustment to income, right on your 1040. You don't need to itemize, you don't need a receipt. You just need to know it exists. Depending on your tax bracket, this single deduction can save you hundreds of dollars every filing season. The math is different for everyone. But if your net self-employment income is $60,000, half your SE tax is roughly $4,890. And that full amount comes off your taxable income before anything else. The home office deduction, the rules that actually apply. Now let's talk about the deduction freelancers fear most. The home office deduction has a reputation for triggering audits. That reputation is outdated. The IRS allows it for any space used regularly and exclusively for business. That word exclusively is the one that matters. Your kitchen table doesn't count. A dedicated desk in a shared bedroom is a gray area. But a spare room used only for client calls and work? That qualifies. The IRS offers two methods. The simplified method gives you $5 per square foot, up to 300 square feet. A maximum of $1,500, no receipts required. The regular method calculates your actual home expenses, rent, utilities, insurance, and applies the percentage of your home used for business. Your situation determines which method wins. If you rent a two-bedroom apartment and dedicate one room entirely to work, the regular method will almost always yield a larger deduction. Run both numbers before you choose. Health insurance premiums, a deduction worth thousands. Here's where the rules get genuinely powerful for self-employed workers. If you pay for your own health insurance, and most freelancers do, you can deduct 100% of your premiums for yourself, your spouse, and your dependents. This is an above-the-line deduction, meaning it reduces your adjusted gross income before you even get to itemizing. According to the Kaiser Family Foundation, the average annual health insurance premium for a self-employed individual in 2023 was approximately $7,911 for single coverage. Deducting that full amount at a 22% tax bracket saves you over $700. At a 24% bracket, it's more. There is one important limit. Your deduction cannot exceed your net self-employment income. If you had a slow year and your business ran at a loss, this deduction is capped at 0 for that year. Your filing status and total income shape exactly how much you recover. But for most full-time freelancers, this is one of the largest deductions on the return. Retirement contributions. Deductions that build your future. Building on that last point about above-the-line deductions. Retirement contributions are the most powerful one most freelancers underuse. If you have a SEP IRA, you can contribute up to 25% of your net self-employment income, with a 2024 cap of $69,000 according to the IRS. Every dollar you contribute comes directly off your taxable income. A solo 401k goes even further, allowing both employee and employer contributions with the same $69,000 total cap. A simple IRA caps contributions at $16,000 for 2024, with a $3,500 catch-up if you're 50 or older. The right account depends on your income level, your consistency, and whether you have any employees. But the deduction math is straightforward. If you're in the 22% bracket and max a CP IRA at $69,000, you reduce your federal tax bill by over $15,000. That's real money. Money that stays invested in compounds, instead of disappearing to the IRS in April. Business expenses, hiding in plain sight. We've covered the big structural deductions. Now let's talk about the everyday expenses freelancers overlook. The IRS allows deductions for any ordinary and necessary business expense. That phrase comes straight from IRS Publication 535. Ordinary means common in your industry. Necessary means helpful for your business. It does not mean required. Software subscriptions you use for client work, professional development courses, industry memberships, the portion of your phone bill used for business, a second monitor you bought for video calls. Business-related mileage of the IRS standard mileage rate for 2024 is 67 cents per mile. If you drove 5,000 business miles this year, that's a $3,350 deduction. Keep a mileage log. Keep receipts. Use a dedicated business bank account or credit card so the paper trail is clean. The IRS expects documentation. Give them what they want, and every one of these deductions holds up. Your actual deduction total depends entirely on how you work and what your business requires. But most freelancers who audit their own expenses for the first time find hundreds, sometimes thousands of dollars they weren't claiming. I'm not a licensed CPA or financial advisor. This is general education for freelancers, not personalized advice. If this helped you see your tax return differently, subscribe to Freelance Finance. Every week I break down the financial moves that freelancers need to make, the ones no employer ever explained because you never had one. Next up, I'll walk you through exactly how to set up a solo 401k as a self-employed worker, step by step, from account opening to your first contribution. The link is on screen now. This video may contain affiliate links. I only recommend tools I use personally.